Hey everyone, Merry Christmas. What an insane way to wrap up the year. The Bank of Japan just dropped their long awaited decision, and the crypto market is breathing a huge sigh of relief. We've been on edge for weeks, watching every hint from Governor Wetter, knowing this rate hike was basically baked in. But when it finally hit on December 19th, raising rates by 25 basis points to 0.75%, the highest in 30 years, the reaction was way calmer than anyone feared. No massive carry trade unwind, no yen exploding higher, just a mild dip before things bounced back. Bitcoin touched around 84K in the pre-news jitters, but quickly climbed back toward 87K, 88K, and altcoins followed suit with a solid recovery. It's classic sell the rumor, buy the news playing out right in front of us. Think about it. This was a normalization move, not some aggressive tightening. The BOJ made it clear the economy is recovering moderately. Wages and inflation are expected to keep rising together. Labor markets tight, corporate profits strong, policies still accommodative, real rates deeply negative. Markets weren't shocked. Everything was priced in. The yen actually weakened a bit post-announcement, confirming no big surprises. And crypto. We rejoiced after all those past hikes where Bitcoin dumped 20-30%. This time the fear led to selling into the event, creating that perfect setup for a relief rally once the dust settled. If you're serious about leveling up your XRP game in this pivotal moment with exclusive insights, alerts, and advanced analysis, the XRP Insiders Elite is your ultimate edge to thrive long term. Join now and unlock the tools to stay ahead. Link in the video description. Right now, as we're sitting here on Christmas Day, Bitcoin's hovering around 87,000, 88,000 after that quick rebound. XRP dipped hard going into the news, hitting lows around 1.77, its deepest since early October, and plenty of alts followed. Solana down to 116, Cardano and others testing old wicks. But post-decision, we're seeing green shoots everywhere. XRP's bounced back toward 1.85, 1.86. Bitcoin's holding firm, and the overall markets shaking off the extreme fear we saw in the Fear and Greed Index down at 16. It's not exploding higher yet, but the selling pressure feels exhausted. And this BOJ confirmation that things aren't as hawkish as feared is giving everyone a breather. I have to admit, I missed the absolute bottom. I was catching some sleep when it hit. But after digesting all the positive vibes building up, I decided to double down on my positions through our partner BYDFI. I added to my Bitcoin and XRP spots with low leverage, 3x to 5x max, to position for potential upside without risking liquidation on a pullback. Bitcoin entry averaged around 87K, now nicely in the green. XRP at about 1.91 average, still a bit underwater, but looking stronger by the hour. Liquidation levels way down. Bitcoin at 36K, XRP even lower. So, plenty of room if we get volatility. This is a longer-term hold for me, not day trading. We've seen those wild 4 to 5% shakes lately, but low leverage keeps things safe. Speaking of recent news boosting the sentiment, the Senate just confirmed pro-crypto Michael Selig as the new CFTC chairman. Huge win. With XRP classified as a commodity for retail, this means friendlier oversight ahead. And David Sachs shared that Senators Tim Scott and John Booman confirmed a markup for the Market Structure Clarity Bill in January. We're closer than ever to landmark legislation that could slash manipulation risks by 70% or more and open the floodgates for institutional money. On the Ripple front, they just deepened their partnership with TJM Institutional Services, investing to supercharge trade execution and clearing for digital assets. Combining Ripple Prime's infrastructure with TJM's expertise makes it easier for hedge funds, family offices, and asset managers to dive in with better efficiency. More partnerships like this mean more real utility and flow on the XRPL, exactly what we need for sustainable growth. Looking deeper at the price action, that October 10th flash crash still lingers in everyone's mind. A black swan where Binance's API glitch liquidated market makers, spreading chaos across exchanges. Some absorbed massive inventory to back stop prices, leading to this prolonged deleveraging we felt for months. Rahul Pal's take resonates. It's not pure manipulation, but de-risking those positions, especially tough in low liquidity, year-end conditions. Tens of billions unwound slowly to minimize impact. Year-end audits add pressure, so shakes persist, but this too shall pass. We won't even remember these choppy months in a year, just like we barely recall earlier pullbacks now. Short-term caution rules. Over-leveraged folks get wrecked on quick pumps and dumps. That's why I stick to low leverage in portions of my portfolio. No major econ data today besides the BOJ aftermath, though President Trump's afternoon address could spark something if it's bombastic, but markets have ignored most political noise lately. Fed rate probabilities unchanged. Fear index likely ticking up as prices stabilize. Another interesting angle on the current chop comes from Vincent Van Codd's recent post. He pointed out that the original Ripple XRP roadmap was delayed by about a year due to the SEC appeal and rulings. Nothing fundamental has changed negatively for Ripple or XRP since then. No bad news on partnerships, tech, or adoption. If anything, the ecosystem has strengthened. So why the price lag? Broader market factors, Bitcoin dominance during deleveraging, and yes, some coordinated selling on low volume periods that lets big players rinse longs. But as Vincent says, play safe, learn the tech, read the white papers, understand the monetary systems. I couldn't agree more. Long term, my conviction in XRP hasn't wavered. Short term, sure. The price action has been frustrating. Outside of those explosive runs in November and mid-year, it's mostly consolidated or bled slowly lower since that October flash crash. We've seen XRP grind down toward the 1.63 area multiple times, only to bounce when real buying steps in. But right now, on Christmas Day, XRP is sitting around 1.85 to 1.8686 after that post-BOJ relief bounce from the 1.77 lows. Not fireworks, but holding key support and showing signs that sellers are tiring. MoonPay's tweet with that unofficial XRP Army mascot got some laughs. The night with the XRP staff looks pretty epic, honestly. Cool design, but the community always has ideas for what the real mascot should be. Fun stuff aside, more serious developments keep stacking up. Ripple just rolled out native lending on the XRPPL, letting institutions borrow XRP directly on-chain like cash, fixed terms, fully transparent, no third-party wrappers needed. This turns XRP into proper collateral for credit markets, huge for hedge funds and asset managers who want yield without off-chain risk. Combine that with the expanded TJM partnership for institutional trade execution and clearing. Ripple Prime infrastructure paired with TJM's expertise means smoother access to global liquidity, better capital efficiency. Every new integration like this adds real volume potential to the ledger. And with RLUSD stablecoin gaining traction in new corridors, the utility case keeps building quietly in the background while price chops around. On the regulatory side, the proc crypto shift feels more real than ever. The new CFTC chair is confirmed and friendly to digital assets. That Clarity Bill markup scheduled for January could finally deliver the market structure rules President Trump pushed for, potentially cutting manipulation risks dramatically and inviting real institutional flows. We've seen ETF inflows for XRP products hold steady even through this dip, with assets topping billions already. Institutions aren't panicking, they're accumulating on weakness. Back to price action. Bitcoin stuck in this 85K, 90K range all month, with Gamma pinning volatility low ahead of the big options expiry. Dealers hedging puts around 85 KLEs created that floor, but calls higher up capped the top side. Similar dynamics played out in alts, including XRP testing those old wicks before rebounding. The fear and greed index climbed a bit from extreme fear, but sentiment's still cautious with holiday thin liquidity. One big move could shake things loose, but so far no massive follow-through either way post-BOJ. Year-end factors are in play too. Tax loss harvesting in some pockets, portfolio rebalancing, miners capitulating after hash rate dips. Traditional finance players like JP Morgan reportedly prepping crypto trading desks for institutions. All signals point to infrastructure maturing fast, even if price doesn't reflect it yet. We've seen this before. Structural wins pile up during bearish or sideways phases. Then catalyst hits and everything reprices quickly. For me, that's why I stay patient with sized positions. Those low leverage longs on BYDFI are built for this kind of environment. Room to breathe through shakes, positioned for when momentum flips. We've got no major data drops today, just holiday vibes and whatever President Trump says in his address. Markets have mostly shrugged off political headlines lately, unless they're directly crypto related. Looking ahead to the final days of 2025, a quiet Santa rally wouldn't surprise me if liquidity stays low and shorts get complacent. Or we could see one more flush to reset over-leveraged positions before flipping higher into January's legislative push. Either way, be careful. Those quick 4 or 5% moves up and down have wrecked plenty of high-lever traders this month. Stick to your plan. Manage risk. Don't chase. One more fun note: MoonPay. Welcoming the former CFTC chair adds another layer of mainstream credibility. And with Vivo Power's deal indirectly exposing investors to Ripple equity and thus XRP holdings, the institutional web keeps widening. Small moves, but they compound. This is not financial advice. As we wrap up this Christmas Day update, the market's holding steady in that familiar range. Bitcoin around $87,000 after flirting with lows near $86,000 earlier in the week. And XRP sitting at about $185 to $186, down slightly, but defending key support without panic selling. Holiday liquidity is thin, amplifying every move, but no major breakdowns yet. The post-BOJ relief has faded into typical year-end chop, with dealers pinning prices through options gamma and everyone waiting for fresh catalysts in January. Looking at the bigger picture heading into 2026, the setup feels loaded with potential. Regulatory tailwinds are stronger than ever. The Clarity Bill markup in January could finally deliver real market structure, slashing manipulation risks and paving the way for bigger institutional flows. XRP ETFs have already racked up billions in assets this year, with steady inflows even through dips. And Ripple's native lending protocol going live turns XRP into true on-chain collateral for institutions. Partnerships keep stacking. Deeper ties with TJM for trade execution, RLUSD expanding corridors, and more hedge funds eyeing XRPL for efficiency. Fundamentals aren't just holding, they're accelerating while price consolidates. That's the beauty of these periods. We've seen deleveraging wrap up, fear peak out around extreme levels in the index, and real utility build quietly. October's flash crash and the slow grind since it'll fade like past pullbacks. Tax harvesting, portfolio rebalancing, minor sales, all temporary noise. When liquidity returns post-holidays with pro-crypto leadership in place and legislation on deck, the repricing could come fast. History shows these sideways or fearful phases right before breakouts. For me, that's why positions stay sized and patient. Low leverage on BYDFI gives breathing room through any final shakes. Positioned for the upside when momentum flips. Short-term watch. 185 on XRP and $85,000 on Bitcoin as flaws. Breaks higher could spark quick relief rallies. No rush. Enjoy the holidays. Spend time with loved ones and let the market do its thing. We've got clarity coming, adoption growing, and a ton of dry powder on the sidelines. If you're ready to go deeper in this transformative phase with exclusive real-time insights, advanced technical breakdowns, institutional flow alerts, and a tight-knit community of serious XRP holders, giving you the unfair advantage to navigate volatility and capture long-term gains. The XRP Insiders Elite is the must-have resource right now. Join today and position yourself to win big in 2026. Link in the video description. If you're serious about leveling up your XRP game at this pivotal moment with proven money-making strategies, alerts, institutional-grade analysis, XRP Insiders Elite gives you a real edge for long-term success. Join now and unlock the tools to stay ahead of volatility, spot high-probability opportunities, and position like smart money. Link in the video description. Merry Christmas, everyone. Stay safe, stay bullish long-term, and I'll catch you in the next update as we close out 2025 strong. Peace.